Hello.
Looking good, everybody.
How's everybody? Good. Just move things out of the way. Hey, that looks nice where you are. Nice and sunny, Ron. Another day of heavy rain for us. Lovely, eh?
Use a little bit of rain here. It's been very hot, week and a half or so.
You can have half of our month's worth if you want. Job done.
We had a good series of like thunderstorms without the scary parts. And that was really nice. And then it just got hot,
Oh,
very dry. And when it's not hot and dry, it's hot and humid.
yeah. Well, we have mild weather. Hi, Glenn. Or it's wet weather. And in the summer, occasionally it gets warm for about 2 weeks. Hot. People go into panic mode and then forget about how hot it was 2 weeks earlier when it's torrential rain for the next few months. Right. I'll get started because it's a big chapter and obviously lots of questions and fire away whenever. I'm going to share my screen. Okay. Hopefully you can see a picture of the Anna Coulling's books. Yeah, all good, excellent. Okay. So I thought I'll start off with, can I zoom in? Probably not. No. I thought I'd start off with by going over the entire what accumulation and distribution is and all the bits in between, and we'll go through it in more detail. But you can see from the chart, let's use a red pen. You can see from the chart, everything starts off at the accumulation phase. And on PTS, that's stage 0, stage 1, isn't it? And then we have stage 2, which is the marking the market up, followed by stage 3, which is the distribution, followed by stage 4, which is the selling off or marking the market down. So it's all, we can all relate to it anyway, which is quite good. So there's nothing new, but it's what we're talking about is what we're why we see 1, 2, 3, and 4, and what the smart money or the insiders really want to do. You know, their idea is when everybody's up here buying, let's change color to green, blue. When everybody's here panicking because they don't want to miss out on this big move up, this is when the insiders are all there selling to all these uneducated retail traders and investors, and pushing it higher, waiting for it to push up, and then and the insiders or the smart money's getting even better prices for their stock, which we're going to what's called stock. And then before we get the massive big push back down. And as you saw today, get my chart up. On the hourly. As you can see today, it was a real fast decline. So do you remember the saying, you take the stairs up nice and slowly, and then you look out the window and jump. That's kind of, hang on, it's got to come with the blood again as well at the bottom. So that's the scenario. I just love the blood at the bottom now. Sums up. But so that's us. That is retail traders. All these people here are all the guys who saw that massive Nvidia push up yesterday, and they're all they're all like, well, I want to be part of this action, buy in here, buying on the trend line. Yeah, we're going to push it up past the trend line. It broke the trend line, buying. And all these uninformed rather than uneducated, because I'm sure there's lots of educated people there, uninformed retail traders, what they're doing, they're just waiting for the inside money, who are sitting there lapping it up, saying, yeah, you keep buying off us. And then boom, they take the elevator down or they jump out the window. And that's basically it. And the reason it slowly moves up and then takes the first floor window down is because they got no stock up here. They've got no inventory left. So it's time to stock up. And time is money. You don't want to be, you're generating lots of money here. You're selling your inventory. You're creating great money up here because all your inventory is being sold at the highest possible prices. And now you're here. And what would you do if you owned a shop and you got no stock? You need to quickly restock again. So you come back, you bring it down as quickly as possible, restock your supplies to start this cycle again. So that's basically it. That's that entire chapter summed up. Right. Have a good day, everyone. So going back to that again, I'm going to go back to the beginning of the chapter. That's near the end. So we kind of seen what happens at the end, but we want to see what happens in between it all now.
Wondering,
So
Paul, if you could go through the volume profile for the accumulation distribution, or if you were going to do that.
I was going to do that. Yeah, I was going to do it in detail now.
Okay, perfect.
Hey, Paul, before we get any further, I just have a quick question. I take it that Anna Coulling did not get back to you in time for this meeting.
Were you trying to get her to come here?
No. Why would I do that? The answer is
If you've got an email sitting there of like, yeah, just send me a Zoom link and it's like several hours old.
I did check about an hour ago. No.
Next time.
Yeah, but I did say that today's obviously very short notice, so it'd be great if you want to join us for a Q&A session.
You could tell her a combined total, we've probably given her like $100 worth in revenue for everybody who's here from buying her book.
We probably have, yeah, exactly.
Sweeten the deal.
Can't get back to my screen. Hang on a second. Kindle. I should have rebooted my machine before. It won't let me flip between desktops. Here we go. So let's go back to that one. Luckily, I know almost every keyboard control for Windows. So I'd have to rely on mouse or keyboard. Yeah, so no, sadly she won't be joining us, but it's worth asking, and hopefully, Anna, if you're watching this video, when hopefully you see how desperate we'd love you to join us, because we all really would be honoured for you to join us. So, right, so the accumulation phase. Basically, it's Anna refers to it as a large warehouse, nice way of thinking of it, who needs to stock up. They're empty at the moment. So the accumulation phase is when you're accumulating your stock to stock up on as much inventory as possible, and you want to buy it at retail, not at retail price. You want to buy it at wholesale price. So you're trying to get it for the best possible price at the lowest possible prices, and so the only way to do that is by filling your warehouse up, but it takes a long time. That's why in accumulation you see it in waves or consolidation. You never see it accumulating once. They need to accumulate, bring some more sellers back in to buy up their stock, but bring some more sellers in to buy up their stock, and they have to try and encourage sellers to sell, and they do that by panicking them, by probably manipulating the news and the media. by bringing in bad stories, and it brings in fear. So the sellers want to get rid of their stock before it drops even further. There's a good example here. Where was it? Here we go. An item of news is released which is perceived as bad for the investment or market. The insiders grab the opportunity to move the market lower fast, triggering a waterfall of selling as they start their accumulation phase, buying inventory at the lowest possible prices, the wholesale price. The market's then calm as the bad news is absorbed before starting to move higher, which is largely as a result of buying by the insiders. So while all of the retail traders are selling, the insiders or the smart money, they're buying everything. They're lapping it all up. So they can't, you see this like that. So they can't buy too quickly because that will scare investors and they won't be able to sell it anymore. So what you're seeing, that's my pen. Yeah. So what we're seeing is waves of buying. So they think of it as a campaign, like a military campaign. So it's planned in advance and they know exactly what they're doing. So as the stock starts coming down to the target price they want to start buying it at, the news and fear is at this point, and all the potential sellers are selling their stocks around here, and then the buyers are creating a wave, like a zigzag pattern as such, and they're pushing the price down on volume, panicking the sellers to sell their stock to them, and the insiders are buying it. So all the high volume peaks are the smart money or the insiders just buying, and then once all of the stock is all purchased at the best possible price, then that's when their campaign or their warehouse is full and it's ready for the move up. So that's basically the accumulation phase, and it's when everyone is selling, they're buying. Well, shall I rephrase that? When everyone is selling, we are buying, because that's what we're going to be doing. Here we go. So the market's repeatedly moved higher and lower. Whipsaw pattern is essential to shake sellers out of the market. So you can think of it like shaking fruit from a tree, like you do in Italy, harvesting olives. So they're basically shaking the tree to try and tempt all the sellers to sell. You're just scaring them into selling. Yeah, that's basically accumulation, and I'm going to want to try and find it on our chart. And I've got a feeling we might be in an accumulation stage right now. So the picture, go back to that. Side by side. The power of here we go. Can you see both screens? Good, okay. So potentially, let's find a better accumulation here. So here's a good accumulation area. It's yellow. And the volume's not very good because it's pre-market. It'd be nice if we can see one during the actual market time. What was that? Something looks nice to see as well. No, I think we can use that because, you know, it will look a bit like this anyway. It's never going to be exactly what we see here, level at the bottom. So we've got this big sell-off, and then the campaign starts, which is, and we know that because we can see this ending volume candle as well. So we've got a general idea that the selling's coming to an end, and then hopefully this works out well. So as we come down, we can see higher increased volume, So insiders are buying there, and then market's pushing up. Do you know what? I had a theory about this earlier. I'll tell you that in a minute. I'm just wondering whether this is more of a redistribution rather than an accumulation. I'll tell you the reason now, actually, because when I was watching it earlier, I saw increased volume on the top ends. So we had increased volume there. We had increased volume here for this candle, and we had increased volume on, I think it was that one there, which was, so that one there. So almost like so this candle here. And it's almost the opposite to accumulation, where accumulation you expect to see the increased volume on the top ends, where a bit like what we're seeing. No, sorry, start again. We were seeing increased volume as it was coming into the bottom, which is like a distribution. And then I was thinking to myself, do you know what? It's probably going to break now. I wonder if it's worth shorting. And look what happened. It exactly did that. And that was purely based on the distribution pattern. But in accumulation, it's the opposite. It was and that's why I wonder whether this is just a rest before we run down further. So it's just a side note. Bubble picture. There you go. So we've got high volume there, and it seemed to be every time it pulled back, we had higher volume, and then higher volume there and there, and that's our breakdown there. Possibly we may be looking for another leg down, but it looks tired today right now.
To your point, sorry, it's just I've always got 5-minute SPX up.
Okay.
SPX is holding this current consolidation at 43.92.70, and if it breaks that, it's got room down to the previous bottoms at 43.83.50. So to your point, there is space to make another leg down potentially.
Yeah. So
I see what you're talking about. Yeah.
Yeah. So because I was trying to find somewhere, I was watching it thinking, oh, we have got accumulation building up, but it was opposite to what we're seeing. Let me just find an accumulation area which matches. Pre-market volume doesn't show very well when you've got massive big candles next to it. Give me one second.
You could use yesterday starting at, oh, that's pre-market as well. Well, I mean, pre-market going into the open yesterday actually is not a bad example. The volume bars are obviously tiny, but you do kind of have this accumulation pattern, and then the big break where the warehouse is full right at the market open, really.
Okay, yeah, let's go to that one
See
then.
what I'm saying?
I'm trying to find one which is almost textbook. And when we can see the volume. Yeah, I'll go back to tomorrow's. Yesterday, tomorrow's. Yeah, like I can predict the future.
Starting about an hour before market open, hour and a half before market open, 5-minute chart.
There.
I think it was Tuesday that we looked at that very textbook one, Paul.
Was it Thursday?
I thought it was Tuesday. I thought it was just this past Tuesday. I'm looking myself. I thought it was the 2-minute chart on the MES.
2 minutes.
Let me see. Tuesday.
Here we go. That's fine, mate. It looks like a bit of accumulation anyway.
Trying to find it. Oh,
If you zoom in enough, then you can hide the bigger candles. Let's go with this anyway. Okay, so.
Oh, sorry, I didn't clarify. I was looking at the ES for the yesterday's 5-minute chart.
Oh, you were okay.
Yeah, sorry about that. Because there's no pre-market on SPX.
Look at that. Big push up. that could still well be accumulation, but the volume doesn't look right. But you're right. There's one we're looking at. This one. Let's have a look at this one. So we've got ending volume, the last hurrah, pushing up. Push down there. Yeah, this is not a bad example. You can use this one. So we've got the downward trend, and then it's hard to see now with the volume. Hang on. Because I found the volume in the pre-market is still pretty valid as well. So we've got increase in volume as we get into the end of the count, as we start the campaign, and then as we're building up, we've got reducing volume, and then we're coming back down to increase in volume, which is what we're seeing on this image here, coming down, increasing volume, and then back up, and then we're coming back down again to increase in volume, pushing back up and down to increase in volume again here. Now we're going to have to move the chart. And then as we push up, we've got this, and this is the breakout over. Yeah, that's not a bad place. That's not a bad example, actually. So that's our accumulation phase. And we've got the push up on volume and the pullback, and there's probably going to be a test, a low volume test, which you can probably see. Maybe that one there's a low volume test to make sure we can still push up, which we'll get to in a minute, around this area. And then obviously it's been going up ever since. So that's a good example, or an okay example of distribution. There was someone I was looking at, I should have made notes of it, but you get the general idea. Every time we see a push down, the insiders are then building up their stock levels. They want to fill up their warehouse, so fill it up at the best possible prices. So when we see a push down here, we see an increase of volume. See a push down here, there's a slight increase in volume there, and it's the same here. We push down on these two, we saw an increase of volume. So when you start identifying accumulation phases, you can then start to work out whether it's going to be consolidation and then carry on, or whether it's going to push back up again. And that's just by watching for the breakout. But there's other clues that give it away, which we'll get into on the next pages. And so the key point is this: just recognize the price action and the associated volume for what it is. This is the insiders manipulating the market in preparation for an extended price move higher. It may be a small move, cause and effect, based on a short time period, or a more significant move based on a longer phase. And if you think perhaps this is a fantasy, let me quote from Richard Ney again, from his book, The Wall Street Gang. On November the 22nd, 1963, the day President Kennedy was assassinated, specialists used the alibi provided by the tragedy to clean out their books down to wholesale price levels. After they had accumulated large inventories of stock, they closed shop for the day and walked off the floor. This prevented the public buy orders from being executed at the day's lows. The specialists in telephone, for example, dropped his stock on November the 22nd from 138 to 130. He opened it on the 25th at 140, sacrificing accuracy for expediency. He admitted to making $25,000 for his trading account. Hope I pronounced that right. So she does go on in this chapter saying that there is lots of a market manipulation, and it's largely unchecked by SEC because most people have got an interest in the market anyway, or in the companies that are doing it. So that's an accumulation phase, and distribution phase is very similar, but the opposite. It's fine.
Could I just throw a thought?
Yeah.
That almost that little description there almost kind of reminds me of or validates why you see big pushes at the end of the day. It's like squeezing what you can out and then cutting it off so that retailers can't
do anything. Yeah.
Yeah, and you know, then the market opens at their mercy the next day, whether higher or low or the same. That's kind of interesting.
Thanks, Billy. Good night. Yeah, no, it is really interesting, and you know, that's probably a legal form of manipulation because they are using the market closing as an excuse. But okay, that's our good areas there. Just trying to find a distribution. And one thing to note, the cause and effect, the longer the distribution or the accumulation goes, the bigger the actual following move is going to be as well. So that's Wyckoff's first or second law, cause and effect. So for example, if we had a long period of consolidation, then you're going to get a long period of pushing up or pushing down generally. So
sorry, I don't want to keep interrupting, but
no, fine.
When I was reading that particular section, it actually reminded me of the first like week of July. You remember when it was just like flat and you just getting shaken out and stopped out and suckered into everything, and then what did it do? It just took off to the heavens.
Exactly.
That was recent events that came to mind when I was reading that. I was like, oh, the light kind of clicked on in my head. Like, man, I feel like a doofus for getting suckered into that. You know, those are my shares they took to rocket the thing higher.
And that's why this chapter is really important. I know it's not the most exciting subject, and I found it quite boring reading about accumulation and distribution, but found it boring even knowing about it. But it's really important knowing what the insiders are doing. The fact when everyone else are buying, they're down here selling, and we knew that anyway. But what this book helps us get more knowledge on is it reminds us of why they're doing it, and they're not really manipulating the market, they're manipulating people's emotions. So they're manipulating fear and greed, basically. That's all they're doing. And they're good at, they've done it for so many years now that they can do it in a way where they can keep the market moving. Because if they started pumping the market immediately, people will just move on to different stocks. And they're too clever. They know that they're not going to be, there's always going to be people that they're going to be suckered into buying their stocks at the highest possible prices so they can sell it, and vice versa. So they're very clever at what they're doing. So we just
reminds me of how you play with a cat, where you're like, oh, here it is, and then the last second, you give the little string a jerk, and
exactly. I can't find a really good example of distribution, but it's all very similar where you've got a build up of no, that's fine. What's at the top of there? I'm sure there's something around here. This is probably a good example, actually. This is a distribution area. I was trying to find one during market hours where we can actually read the volume. In fact, no, this is perfect. So I looked at this earlier. So on this distribution, we've got the big volume bar on the push up. Let's go to yellow because it's easy to see. So we've got to push up that volume bar there as we're pushing up to this point. And then you can see that volume bar there as we're pushing up to this point. I think it's that one. Another volume bar here as we're pushing up to this point. And then another volume bar here just before the red as we push up to that point. So notice how we're riding that trend, that upper channel. And then it gets really interesting. We've got this last push up at the end. Look at this big high volume. Let me make it full screen. Here we go, that's better. So now this is interesting now because now we've got this big increased volume on this big push up. And I don't think she talks about fake outs. She probably does, but it broken through the channel and trying to capture all these people who don't want to miss out on this move. So all these people are now trapped here today, and then we had this big sell-off. And look at the volume on this is pre-market. Don't forget, increase in volume as we took this nosedive, and again out through the window. And this is a really good example on increased volume on these levels here. I'll just draw close to it. My pen's really lagged. I don't know why. I think it might be because I've got whenever I record, there's about a second delay between the pen and when I put it on the screen.
I think Zoom has really bad latency as well. I
Oh,
bet if you're
right.
using like OBS or something, it would have lower latency.
Oh, I might give that a try next time. But so this is a classic distribution, exactly what she puts in the book, which is that one there with the increased volume, and then the big push up at the end, and the fake out or the fake breakout, followed by, well, as you've seen today, the big sell off. And it's still selling off now. So that's a good example. So I won't go any further. So the next thing is what they're looking for is testing, and I wonder whether there's bound to be a good test on the push down. So basically, when they test, they want to make sure that all. So in this example behind this book, where we've got this distribution area, they want to do a test to make sure that there's no more buyers in the market, because they don't want to push it down and suddenly buyers come along and push it all the way back up again. So the only way to test the distribution is by pushing the price up slightly, and normally it's better to see on a higher time frame. So we're looking for it's all low volume, that's the problem. Looking for a low volume test. Probably like that one. I'm not sure this is a good example of a test, but it's a hammer candle basically. And what they're looking for is they want to drive the price up and see whether buyers react to it. And if buyers are reacting to it, you get a bigger buy-in candle. But then no buyers reacted to that. So therefore, the buyers are now exhausted. And so they just do their last, obviously here, they've just done their last push up to make sure there's no buyers gone. And then they know it's clear to sell off. And I've seen tests in a couple places. So sometimes they might want to do a test, maybe see where they push it down. They bring the price back down to the buying price again. So creating a almost like a hammer candle. But we're going down, so probably looking for it. It's hard to find it. I think from what I understand, it's better on higher time frames like hour and daily. Sorry, Adam.
I was looking at yesterday's chart again because there was so much that happened. What about 2:40 p.m.? Obviously 2:40 p.m. 2:40 5-minute chart ES. It had a big 5-minute igniting bar that went up, and then there was decreasing volume. That might not be the correct example, but as I'm trying to understand this, it kind of seems like a valid example.
Yeah, something like this is what it says, low volume, but it's low volume to pre-market. I can't really find one in a. So let's go back into the 5-minute. You say?
Yeah, it might not be quite what we're looking for.
We're basically looking for a topping tail candle on low volume.
155. Since it's a doji, so I don't know if that really. Or sorry, 255 Eastern.
255. As in like this afternoon?
Yesterday, sorry.
Oh.
8:23.
Generally, it's during this part when it's about to push back down.
Okay.
So
it had a little bit
that
of
one
a
there,
push
in
down, but
fact,
not a significant one.
yeah, and
Might
it's on
not
the
be it.
time frames. In fact, this one's not a bad one here actually. It's quite low volume as well. Yeah. So this one here, so the market makers pushed it up. There was no volume in it, as you can tell by this. You can just about this really low, these two low volume bars, and then they brought it back down to the original price, and they got two outcomes. Either, let's see if I can, here we go. The two outcomes are this: if they get high volume, then they know that there's still sellers there, and or buyers there, I meant. So they don't high volume. The buyers are there, so they're not ready to bring the market down. So what they do next is start another round of whipsawing, a distribution, and then do another test. And then if it's low volume, so like similar to what we're seeing here, it's quite low volume if you compare it to the previous candles as well, then they know then that there's no one interested in buying now. So now it's time to push the market down. And that's kind of what we look for. I find it really hard trying to find these test candles. You don't always see them, and from what I gather, higher time frames are going to be better as well, because that could just be a random top and tail candle. And this is a point when they know then they've got no buyers left, so they want to move the market fast. And we talked about this earlier, that they're going to push it down really fast, like out through the window or down the elevator, so they can start their resupply again. And how do they move it down? The news and media, of course. So they use bad news to scare people out of buying and to get them to sell their stocks. This one was moved back for an area of recent heavy selling. Yeah. So the worst thing that can happen is selling pressure to return, bring the campaign to a shodden halt. So, but yeah, so they basically don't want any more people buying, because they want to start getting it back down again. And then so that's what we're looking for, something like this, testing the demand for this top. So we're looking for a top and tail candle as it's coming down, but it's quite difficult to see on these charts. So I can't really find one with the volume we're looking for. You know what? We haven't looked at daily. Daily's a good one to look for as well, because then you might be able to predict what's going to happen. So these really low volume ones are probably like half days or something. So that's Good Friday. But they are there.
What about 7-3 on ES daily? It might just be a narrow range candle, but
That one there.
it's got like insanely low volume compared to I guess it didn't push down though, so that's probably not a good example.
Yeah. But they are there when you look
Pardon
for
my
them.
interruption.
It's hard. I know when Anna Coulling was in the team ball thing, someone asked her about testing, and the reply was that she will put some pictures of some in higher time frames on Twitter, but I've never seen them. So maybe she's struggling to find some testing candles, but they're probably there in different time frames. We just need to find the time frame that the insider's using. 60-minute, probably the daily, probably not the 5-minute. Yeah, these are pretty low volume in the 60-minute. That one there, that's a good example here. In fact, that's a good example. I found one. So we've got slightly larger volume before, which for this candle, and then there's a test candle here, and that's on half the volume as well. So there was no buyers, so they know straight away. You can see it's got pushed up. The buyers didn't bother taking it when it pushed up above, and then that started the beginning of the sell-off. So that's a good candle. In fact, I'll stick to hourly when I look for these candles.
I think you have your wicks backwards, guys. I think at the top, it should be a hammer. At the bottom, it should be a tombstone. So if you go to your right, 3 candles, 4 candles, you have
No, it needs to be a topping tail for the distribution, because hang on,
It's the opposite.
there's distribution there. She's using a topping tail.
That's at the bottom.
Yeah,
Hang on.
well,
I get confused now, and I testing
yeah.
demand. Oh, so I'm getting confused between demand and supply. Demand, yeah. So previous areas of buying, heavy buying volume. Yeah, no. Previously have heavy buying. That would be. Sorry. Okay, yeah, sorry. So on this one here, the Windows, good spot.
More like 512. Right? Wouldn't this be, well,
Yeah, so we had that's our accumulation area at the bottom. We're pushing up. We haven't quite got to distribution, will be up here. And so we're looking for bottom tail at the, but usually it's just after the accumulation. Where's the first picture? That one there. So it's not at the top. So that will be just above the accumulation zone. So we're looking for a topping tail to confirm that we can continue the move up. So we're looking for a low volume hammer candle as such here. Have I understood that correctly? Testing the supply. Yeah, so one of the biggest problems inside the space when mounting any campaign is they can never be sure all the selling has been absorbed, following an accumulation phase. The worst thing that could happen is they begin to move the market higher, only to be hit by waves of selling, which would then drive the market lower, undoing all their hard work of shaking the sellers out of the market. So how do the insiders overcome this? They just the answer is as in any market, they test. So again, there's no different to launching another marketing campaign. So and let's read that up. The insiders also want to test, and once they have completed the accumulation phase, they prepared to move the market higher and to begin the selling process. At this stage, they're generally moving back into the price regions which have only seen heavy selling. So they execute a test to gauge the market reaction, to check all the selling has been absorbed in the accumulation phase. So I would say the heavy selling would be at the bottom of the accumulation stage, or coming out of the accumulation stage. Let's go back to that. I hate this Kindle app. I like my other app, but I thought I'd use a Kindle one because it's the official book one rather than the one I normally use. So we're looking for a hammer as we're coming out of accumulation. Relatively low volume, but we're near the end anyway. Yeah. Anyone can see any possible tests on their charts, the hourly or the daily would do. But it doesn't matter if not, we can just move on. High volume test, bad news. In the distribution phase. Yeah, I'm sure I'm sure at the end of the distribution phase, we're looking for a topping tail candle, because we're looking, it's the end of the distribution phase. So getting to the end, we want to do a test, push it up, see whether the buyers want to buy into that candle. And if they do, then we'll have a big thick candle on higher volume. And if they don't, then we have a small candle where it's back to where it started on low volume. That's how I've generally read it. And maybe I've misunderstood it. Does that make sense to you, Ron?
Sorry, I'm country club and I'm not supposed to be talking.
Oh, okay, fair enough.
What you just explained makes sense, but that's not what I read in the book.
Oh, okay.
Um,
Yeah.
I saw the test as opposite, but I'll reread it today.
Yeah. Well, I'm
But I
looking
mean,
at.
I just read it an hour.
Okay. Oh, fair enough. Okay. Well, I'll have to reread it again because I may have misunderstood it. But however, I always understood it is that we're looking for a low volume push up and back down to where we started. And
So if you look at the bars that she showed in the example you were just showing, that's in the like say that one's in the distribution phase.
yeah,
And as it gets to the top is where you'd see all the high volume. If you were to look across this strip, every time it gets to the top in the distribution phase, there's high volume, high volume, high volume. And this one is where they come down and they know they've exhausted because there's no volume in it. And so they push it one last time back up to the top and then start their sell off. So
yeah,
that's how you know that sellers are exhausted. There's no more buyers. I mean,
okay.
I don't know. I saw it's the opposite.
Oh,
I'll read
okay. Yeah, I'll reread it later. But in my mind, that's how I've always remembered it as. But maybe I misunderstood it. But anyway, it's very hard trying to find a test candle. But the idea of the test candle is that if you see one and it's doing the opposite to what you expect it to do. So if you see a whatever tail candle you're looking at, if you've got high volume on the test, then you know there's buyers and sellers still in that candle. And if it's low volume, then generally they can do what they want with the market, bring it back down.
Right. So I think we'd have more success in finding test candles in individual stocks because individual stocks have a market maker that's more hands-on.
Yeah.
This is MES is an accumulation of all the stocks.
Yeah, it's harder. Yeah.
So you could have 500 different market makers making that up. So
Yeah,
does that make sense?
it does. Yeah. But you have big operators in the futures market though who will push up and do the same type of testing, but probably not on the same scale as the market makers.
Probably true.
So yeah. Okay. Yeah, that makes sense. Okay, so moving into the last section, and we're looking at buying and selling Climax. And this is different to how we've always talked about buying Climax, and PTS is the opposite way around to what PTS says it, I believe, because a selling Climax is when we are at the top of a distribution area and the insiders, we're doing it from the insider's perspective, and it's the insiders who are selling. So it's their selling Climax, pushing that last bit in before we see the big drop down. And whereas a buying Climax is the other way around, where the insiders are pushing the stock down and forcing the volume to buy, forcing people to buy the stock at a low. No, they're buying the stock at a low level, forcing the uninformed people to sell their stocks around there before they push the market back up again. So, and then there's a note in this, and this book is written from the perspective of the insiders, the specialists and the big operators and the market makers. And it says, to be clear on selling Climax appears at the top of the bullish trend, whilst buying Climax appears at the bottom of a bearish trend and reflects the actions of the insiders and not the Joe public. So the selling Climax is the last hurrah before the insiders take the market lower. So if we can see that here. So got that accumulation here, and then the big last bit of selling at the end. This is Apple, and it sold off there before we pushed down. It's accumulation of all their efforts, and this is a point where the warehouse is almost empty and requires one last big effort to force the market higher, and then drawing in those nervous traders and speculators who have been waiting and waiting for the right time to jump in and can finally wait no longer. And so they give into fear of missing out and buy. And so now these fearful people are now sitting up here on Apple at the moment thinking, what did I do wrong today, as we're pushing down? And obviously buying Climax is the same. Go to the next page. Here we go. So it's a nice, pretty much sums it up. So with so going back to selling Climax again, we've got lots of topping tails. We can kind of relate to that here. Topping tails, even on that candle, there's a topping tail. And on higher volume as well. Can't really tell whether the pre-market's higher volume, but we definitely had higher volume on this candle. And what's that? That's an hour before the pre-market. And so we're getting these high volume candles on all these topping tail candles. And it's like Adam said earlier, it's right at the very end of the day when the market's pushing up that last tiny bit before they close the market down ready for tomorrow, when you know they're going to be opening up down here somewhere. So that's basically how I see selling Climax, and obviously buying Climax is the same. I think find a good example. Buying. So you know, it's not always going to be textbook. We can't always find it. So buying Climax, we had this area of accumulation at the bottom where it was selling. What are we looking at now? Still Apple, isn't it? So we're selling off, and then on this high volume push. And again, it's not a very good example of the hourly, but let's go into the 5 minute. I'm sure we can find something much better. Okay. This is a random area, random stock. So we've got volume on that push down, and then volume on that push down. As you can see, it's increasing volume. Increasing volume there, not much. Potentially, is that? It's hard to see if there's any tests in this area as well. And then once we've got out of the accumulation zone, my pen's not working now. It's good. Once we've made it out of the accumulation zone, then we see that big push up all the way up to the top. Hope that makes sense. I definitely need to reboot my PC, I think, because I've lost my access to my pen now. I can only use the one built into TradingView, which is rubbish. What about this? Luckily, I have access to another pen. Look at that. Here we go. So I want to try and find it on MES because that's what we look at the most. 5 minutes. In fact, we talked about it here, didn't we? Selling Climax at the end of the market. Topping tails, high volume, more topping tails there as well. and then we saw the sell-off today. So that's quite a good example of a distribution zone. And then at the bottom, got the supply zone. So a high volume there, higher volume there, and then we eventually, so all of the uninformed has now sold off their stock really cheap to the insiders who have now used their stock, and they're now selling it today probably back to the same people at the top who were stuck there. They're now probably stuck at the top as well. And I think that's pretty much chapter 5 just summed up. Buying and selling climate. So we just want to be able to, and she talks about SEC and manipulation a little bit, and we're back to that last picture we had, and one we started off with, where we went in with the accumulation phase, followed by the test, followed by the distribution and the selling climax, followed by the pushback down, and it's repeated over and over and over again. So 1, 2, 3, and 4. I don't know if anybody's got any better examples on their screen to look at. We'll just apply it.
Not in particularly. I'm still trying to wrap my head around some of these concepts.
Yeah.
But yeah. Oh, this has been awesome. I really enjoyed this. I actually have to hop off here in a couple minutes, but appreciate you putting this on every week. It's really good.
No, that's okay. It's good because we speak out loud about it, and like I reread this chapter today, and I need to go read back the testing now because I may have understood it differently. But it was interesting because
I'll read it too. Maybe I'm backwards on it.
Oh, okay. Yeah,
I think I'm right, but who knows? We'll find out.
Yeah. Maybe I just misunderstood it from the beginning because I might have made it up myself. But that's so
even just like I do most of my reading before bed, so it's nice to be able to have the book in front of me and have charts open next to me. It fleshes out what I'm reading a lot better than just reading the book by itself. But
yeah, no, the book's brilliant, by the way, and I've got so much out of it so far. And I'll be honest with you, the testing side, I've very rarely found a test count. I do occasionally see them, but like I said, I've always thought it the opposite way around to what Ron thinks it is. So maybe that's why I'm a failed trader. Maybe I need to turn my chart around the other way. Oh, there we go. I found it now. So, but it's a good chapter to read, and this is the second time I've read it now. So I will need to and obviously we went over the first chapter, chapter 4 last week. We talked about the candles, and that was really good as well. And I'm seeing a lot more anomalies now, quite a lot, and it's nice and picturing. We're putting multiple bars together, and for example, today. Oh wow, look at that! Right down at that level now. How does it make you feel, Ron, knowing that we were in up here? And I sold there.
The meat of the fish. We got the meat of the fish.
Yeah, exactly that. Yeah,
the problem is it's a big fish.
It is a big fish, and we only took the neck of the fish off.
Right.
We descaled it. That's about it.
Yeah.
So next time I want to eat the rest of the fish, not just the scales. But like I said, I'm not worried about it. I was watching this bottom, and exactly what I was thinking earlier actually happened as well. So maybe by watching it today and not taking part in it, I actually learned something about a reaccumulation zones. Because I was watching a video today, and I want to get a book about on Wyckoff's laws of trading. And one thing I saw in the video, I'll share the video later. It's really good. It's about an hour and a half long. And one thing it's talking about was which you don't get in this book, redistribution and reaccumulation zone stages, and one of the things was exactly what we were talking about earlier, the volume coming in, and it was the opposite way around to what I was expecting it to see. And I wish I was online with someone, because I would have said I think it's going to break down, because I was what's going on? I was probably watching it here, and I saw it pull out. It was about here actually, and I saw the volume going up on these pivots up, and I was thinking, hang on, this looks like a distribution rather than accumulation, and then it just sold off. And in my mind, I was getting ready to go long. You see, that's the reason I was watching it, because I was hoping it would give me a double bottom. It wasn't until I was reading the accumulation distribution chapter, and I remembered the video I watched about reaccumulation and redistribution. I thought it looks like the opposite to what I'm expecting, and I'm glad. I just wish I was someone there so I could say it to him, but it worked out exactly that. So having a look at Wyckoff's, I'm not sure how it's pronounced, Wyckoff or Wyckoff. It's worth learning this laws, the cause and effect. I can't remember the other two laws. The candles are relative to the volume, and there's one more, supply and demand, I think it is, isn't it? So yeah, really good.
It's supply and demand, cause and effect, and effort versus result is Wyckoff's 3 laws.
Yeah, and the effort. What's the second one you said?
Effort versus result, which she talks about it in, I think, chapter 1 or 2, and then hasn't yet gone into much detail about what that actually looks like. So I'm actually very curious to know what that looks like in practicality.
Yeah, and sorry, what's the other one? Cause and effect, isn't it? And sorry, I've gone brain dead. I've forgotten. I know supply and demand. Yeah, well, one of them's basically if you get a big volume bar, then you need a big wide range candle, and if you don't have a wide range candle and you have a small volume bar, then that's one of the laws. That's an anomaly, and that's one of his laws. I think.
Yeah, cause and effect. Small volume should equal small price reaction. Larger volume should equal larger, or should cause a larger effect. So thus, the inverse would create an anomaly.
Yeah, exactly. And I think I also read on the Wyckoff's that video, he said about also the length of the accumulation and distribution will directly affect the length of the following resulting. Well, here we go. Look at how long that was accumulating, distributing for, and then we had a whole day of selling off. Whereas we have a short one, that little short one there, we had a shorter sell off. So that's worth thinking about. Just knowing that alone can let you then plan your targets for the end of the day as well, rather than getting out of the low. You've had a long area of distribution, therefore we might expect a longer sell-off.
It would be interesting to back test and see like the duration of the accumulation versus the like vertical or like the vertical drop in or rise in price, to see if there's
it'll play out.
Yeah, exactly that. Yeah,
it'll play out how that because it builds the pressure. One thing I wanted to mention, if you go back to how we've been trading for the last year, we play like these long dips, and then it goes into accumulation and distribution. And remember how David would say, now you got to play the range. At a certain part of the day, it goes into that, and you got to start buying where the market makers are buying and insiders are buying. And it's the opposite. You almost flip how you were thinking. If that makes any sense, it's a little bit different.
Yeah, it does. Yeah,
that time of day.
Yeah, no, definitely. I think that's the thing. That's the difference between the 10% of traders and who are doing really well, and the other 90% of traders who are always chasing the moves, like chasing the long up here or chasing the short. Probably chasing the short here, because how many people would try to take that as a double bottom, or now looking at this as a double bottom? That's probably a higher probability trade. Wow, this sell-off is amazing. I'm gutted. Yeah, so that's fine. What makes it worse, Ron, is the fact even though we got in on the pullback around here, I was in up here originally. I was even higher up. when I started the pre-market today.
Yeah, I had a short entry right off the open that I missed by just a little bit. And
I don't feel bad about the move at all. I think I played it fairly well.
Yeah.
So, I mean, yes, there's more, but I didn't want to be tied to my screen all day. So
know
I
what?
took some good stuff and walked. Yeah.
Yeah, I was just about to say that. The good thing is that I want to try and get my trading down to a couple of hours a day rather than sitting in front of the screen all day. And quality of life versus sitting on your screen. I think quality of life's got to win every time. So.
Amen. Well, I'm gonna take off before Ron gets tackled by security. I just can't bear to see that.
Well, I'm trying to get Ron to talk more so he does get tackled by security.
It's true, we are recording.
So, it looks like we're gonna have to end the day on a downer. No security wrestling on down to the ground.
I think we should call this kind of this sort of just massive sell off, the Ron security play or something. Like when we see it, Ron was up here and then he gets tackled by security and now he's down there, something like that. We'll work on it.
It's like there's a film, is it called Black Hawk Down? We can call it Ron is Down.
There you go.
So before I go,
By the way, I love this book. It is a great choice, guys.
really good, isn't it?
Yeah.
It really clarifies what we've been trying to see for years, and it's just summed up in a couple of chapters. Chapters 4, 5, 6, and 7 are the main ones. I think the others are not but they're the ones we want to focus on, I think. But brilliant.
I would just like to say, Anna Coulling, if you ever watch this, I bought your book. I did not take it from the internet for free. I spent
Real
yeah,
money.
exactly. There's proof. I also have the book.
Okay, fair enough. Mine's a digital copy, and I've got all 4 of her books. But
anyways, I
yeah.
will I'm gonna hop off. I'll see anybody who's around tomorrow. Love and appreciate you all. Love being here with everybody.
Yeah, thank you.
Might have a short day tomorrow. I don't know if I'll make it back for power because I'm finally getting around to that camping trip with my daughter.
Oh, brilliant.
Going on Saturday just for a little overnight thing. It'll be her first camping trip. So we're going to the state park up the road.
Oh, brilliant.
Not as primitive as I'd like it to be, but it'll be a great introduction to camping for her. So
True.
That's
what you gotta think.
Yeah. I mean, I'm like that. I'd like to backpack in for a mile without, much else kind of guy. But yeah, it's gonna be great. So I might just have a short day tomorrow so I can get prepped for that.
Don't blame you.
Saturday morning.
Yeah.
All right. See you all later.
Yeah, you take care, okay? Thank you, everybody.
Thanks, everyone. Thank you, Paul. Good job.
Good night.
Nice.